Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on May 21st, 2020. We have a day and a half left basically in the trading world for this week before we hit the Memorial Day holiday. And before we get into this webinar, we just want to pull up our disclaimer to remind you that this is for illustrative and educational purposes only. Remember, this is in delay. So, alright, let's go to our plug real quick for the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. Check it out. We got a couple signals that we're going to go over here. And if you want to learn how to trade these signals, read the book. So, all right, let's go to Forex-Trading-Unlocked.com. Here we are. All right, now we are pulling up going all the way down to our chart that's already pulled up. We're going to go over, we don't need to do the numbers. They already came out. Unemployment claims, once again, were over 2 million. However, irony was they came out less than expected, which was, I guess, a good thing. And then irony of it all is like that difference was what the normal claims would be before all this coronavirus stuff started, around 280,000 difference between actual and expected. So I guess the fact that they came out less than expected, that is a positive thing. But when you're talking about, excuse me, 2.4 million claims, whatever, it's still insane. So anyhow, dollar index is under pressure, and as you can see, it's just caught in the middle of this range. We have not made a lower move low. However, we have made a lower move high after a lower move low prior that we had bounced off of. So that keeps us definitely in a very slightly neutral to negative trend. But as a whole, we are just negative in the short run on this. So let's see what's going on. We've had some market movement. The euro US dollar, our biggest component of the dollar index. We're going to take a look at this one first. And as you can see, we had a nice little run up over the past few sessions. We don't have any FX positions on anymore, but we do still have some binary options positions on. So we do have a euro US dollar greater than 10.25. As you can see, we have this marked with this dashed kind of orangish line. This is our strike price that we're looking for the market to get above sometime before expiration tomorrow. We're hovering just below it. Right now, you can see it's neutral. We're 45 minutes after the numbers came out, and the stock market hasn't opened yet. Obviously, there's the futures that are still trading, and we'll see. We have, 13 minutes until the New York stock market opens up. And we'll see, is there going to get follow through here and get us above this 10.25? Now, remember, we're hovering right here at this past high, which is just below that strike price. So all we have to do is just rally just a little bit more. I mean, we're looking at a half a point rally here. It's about 75, like the 3/4 of a point rally. But if we do get just below this strike price, we'd be hitting newer move highs. Odds are is that we would most likely pierce this. Now, whether we would stay above it for very long or not, that's a whole different story. But right now, it is looking like we have a good shot at this. But we'll see. Who knows? The market could totally reverse today and crap out, so we don't know. But right now, we do have our buy signal here that is still in place. We have this market has been in basically a sideways trend for months now, and it's definitely contained within basically 107.5 up to 111 even, basically 110.5. So we're coming into key resistance. So this will be interesting to see if the dollar index truly is just snaking around in a range trade, or is it getting ready for dollar bears to pounce and get these other currencies to break out to the upside versus the dollar. So we've looked at the first major currency. Now what we do have here also is, we don't have anything on there, excuse me, sorry, we have the Nadex binary options. We do have 2 British pound positions on, so let's see how those two are faring. So the British pound is the second biggest component in the dollar index. And if I would pull up the symbol properly, you would see this. Okay, so the British pound US dollar, and it's loading up. Now here we have this marked off too, where we have our 2 strike prices at $1.2275 and $1.2375. Now we did have a buy signal on Monday. Right here, this is one of our favorite short-term buy signals, especially because it's a high Japanese candlestick pattern. It's called a piercing line. Now this has us targeting right just above this second strike price. Now remember, these are options that we have on. This isn't the actual futures, and it's not the Forex cash either. So we have an expiration that's coming due. All of our options are expiring on the 22nd, which is tomorrow. So we have until 2 o'clock Chicago time tomorrow for this market to get above both of these strike prices. One of them would be good right off the bat. We can't got in on Monday, so we were in from lower than we were at now. Time is running out, but we don't. That variable is almost gone. So all we need is really a pop. So if we can get dollar bears to pounce on these major currencies, especially today into tomorrow morning, that would set us up to see a nice couple profitable options trades. So right now we do have a buy signal. We're not necessarily a bull. Remember, this market had failed here. This had made a head and shoulders pattern. You can see that this low was taken out. And then let's get the trend line here. Here was the neckline right here. Okay, so this market had taken out this neckline, and then it took out this low here, and that confirmed a lower move high with a lower move low, which set us up for neutral to begin with, and this market had been in a upside correction. It had been making higher move highs and higher move lows. Then it took out the neckline and broke down into this Monday, and Monday it set a newer move low, turned around, gave us this piercing line buy signal. Okay, and then now we're looking to see if we're going to get follow through or if this if the signal is going to fail. So the key here is if you're an aggressive bull, is that this last prior low would be our downside breakout point, which then would negate the buy signal. So we have a bullish bias there. So for the first 2 European currencies that we looked at, they're pretty much a bull against the U.S. dollar. Now we have the U.S. dollar Swiss. Now yesterday the U.S. dollar pounced on this one, had a nice slide. As you can see, it had a really good range yesterday. It had a high of, was it 97.16 and a low of 96.38. That's one of the biggest ranges that it had in like two weeks basically. But look at here. Now we bounce back and we're above the midpoint of yesterday's trading, so it's kind of neutral, which puts us back into this. Is the dollar index going sideways? Is it ready for a breakout? And I think that there's too much indecision overall. But let's take a look at the rest of the currencies and see if we can find out if there's more dollar weakness. But right now it does seem that the pound and the euro are trying to pressure the dollar. U.S. dollar Swiss looked like it was going to yesterday, but it reversed gears today. So is that a signal of anything? Probably not, because this one's been very reflective of the dollar index and also very much a holding pattern for the past now almost 2 months. So now let's go look at some other markets and see if we got anything else to get a vibe. So right now we have a neutral to bearish posture for the dollar versus the major currencies in the EU and around the EU, the UK. Now here we have what is called a 3 inside up buy pattern. This was triggered over 2 weeks ago. So see how we made this low, this red bar? Then these 2 days that followed it, that signaled our trade. And our initial risk was there. And then now our key for any aggressive bulls is this prior low here, higher move low. Reason being is we did make a higher move high a couple days ago, but you can see that the ranges here have been really horrible. So for the U.S. dollar, Japanese yen, we have greater than 108.25. You can see that we have that strike price in, so we're just below this. You know, if we get a day like we had back here when this buy signal was first generated, this would complete the move. And the thing is that from this buy signal, our target is just below this 108.25. We almost hit it 2 sessions ago. But then we also have, we're looking at if dollar strength, it's kind of funny. If dollar weakness is coming in versus the other major currencies, and then maybe against some of the lesser currencies as well, that means that the coronavirus trade is off the table for the U.S. dollar, at least for the most part. It's a factor, but the fear factor is waning. So unless there's a resurgence and a double dip as far as in a health concern when it comes to the coronavirus, and hopefully there isn't, then we might start going back to the way we were before that. It's meaning that there's certain divergence. We're not going to have just a dollar bullying around all these currencies and waiting on to see what the Fed's doing and what the U.S. government's doing. Now that things are subsiding in that department, we'll probably start to get back more to, let's see what the economics of things are going as we come back online. Let's see how things are impacted. And then, like, for instance, the U.S. dollar or Japanese yen was a bull. It was a major, major bull before all this coronavirus thing. It was nipping, just constantly nipping at new highs. Then we had made these highs in February before we'd had this big sell-off. And right before that, I mean, when we first poked these highs, even in the midst of the coronavirus, we were looking at potentially still seeing a run up to 113. Does that mean we're going to be a monstrous bull right now? Well, not necessarily, but here's something I want you to take a look at. So, we are coming towards a very potentially big breakout area. Reason being is, let's just say, but we start if the U.S. dollar yen is still in the coronavirus trade, then odds are it's going to continue to go sideways with the dollar index and maintain a range. However, what if this last low here is the low for, let's say, another 2 to 3 months? That gives us a chance at going back up and challenging this downward sloping resistance line. Now, does that mean we're going up to 113? Maybe not. I mean, if you see how the volatility has been for the past month and a half and almost 2 months, the ranges aren't that big. So we're not having this trading like we had back in March. We're having this kind of trading. And even before this, the yen had been a very tight market for months. But this is all long before the whole coronavirus thing happened. So the question is, what are we going to do? Well, right now, we're still bullish. We're riding this move because one thing's for sure we can count on: higher move high, higher move low, higher move high. That means let's see what goes on. Right now in the short run, we are bullish. Longer term, not necessarily. We could be topping out, setting a longer term lower move high. Remember, this buy signal we had here was the last lower move low on a major scale. Whether you're looking at a multi-monthly or multi-weekly or even on the daily chart, this is a key low. And this is supporting the neutral to bullish trend if this market is going to be trending higher over the next couple months. So we're not trying to look for a couple months. We're just trying to get through a couple days and see if we can pierce this area here. But there is a little line coming off of right here. So let's just say we get above our strike price here, whether it's this week or next week, and we just continue to trend higher. If we take out this 109.49, then we definitely have a very good chance it's coming up, butting up against this downward sloping resistance here. However, taking out this high here, with that on a longer term scale, we are definitely building that higher move high situation, the higher move low situation, which means we would be going from a short term to even an intermediate term bull. So, and I know I'm dwelling on the US dollar yen here, but my whole point is, when this occurs, if this occurs, then that means we're going to be back to free-flowing currencies, meaning that there's flight to quality in the yen, the Swiss, and the US dollar. But because the coronavirus trade starts to come off, we're going to start to see a balancing, meaning that whether the dollar is a bull or a bear versus the other currencies, the US dollar yen trade most likely may become a bull. So, and the Japanese don't like a strong yen. It's not good for them coming out of this coronavirus trade. So not that they're going to do anything to do that. However, they may. The Bank of Japan can do whatever they want to do. They've been very cautious in their movements over the past year, actually, but they have made two unexpected changes in stance, which is something that usually, it's not that you can set your watch by the Bank of Japan, but they are just very consistently conservative. So we'll see how this does pan out, and we don't have very much action going on today, but right now we are seeing strength, and of all places, the US dollar, Japanese yen. So now let's go look at some of these other currencies in this part of the world, because they had a nice breakout to the upside. So the Australian dollar, US dollar, and the New Zealand dollar, US dollar, which had been in a mode trying to set off maybe a nice downside correction. Well, that didn't happen. Today we're slightly lower, but as you can see, we're just below the highs. We're in the higher part of the range. The market was lower before. We have an inside day. In fact, it's inside the body of yesterday. So let's see how this gets contained. I think, then, since we have an option on, we have an Australian dollar, US dollar is greater than 66.25. You can see that represented by the orange dashed line here. We're at 65.88 right now, so half a point away, and we can turn a profit on this one. So this market has just made higher move highs after higher move lows. The funny thing was, if you look at this part here before this last 5-day rally, we had like a shoulder, a head, and a shoulder here with a little neckline here that it started to take out, and then boom, Monday came. Tuesday, nothing. Yesterday, follow through. Today, I don't know, maybe it's going to be like Tuesday, and then Friday we'll get another pop. So, and another key thing is that, remember when this coronavirus thing really first started? We had this day. This was a day that I don't care who you are, algo trader, long-time trader, brand new trader. This is a day that if you were long or short, odds are, unless you were short, you just got crushed. You know, so I mean, this is just, if on the chart it looks like a volatile day, but if you really put it into perspective, the range on this day was insane. You had a high of 66.84 and a low of 63.14. I mean, that is just not a normal range day. And then you can see what precipitated afterwards. But now we don't have that kind of volatility, so the odds of us getting a gush that's just going to explode like today and go, I mean, anything could happen, but this is going to be a key level. Is it going to be what contains this market, or is it going to be what could be the catalyst to really just drive this Australian bull? Now remember, oil has been rallying, and this market started a correction right off the bat in the beginning of this phase back in March while everything else was going very indecisive. I don't know about you folks, but besides the fact that it took out the downward sloping trend, and it's been rallying now for almost 2.5 months. That's kind of bullish to me. So I'd be careful selling into this rally. I'm not saying to buy the highs, but if you're already in the trade, keep on working it. I would probably use this last higher move low as a key directional pivot, and then definitely, you know, we have this range here that was from that day. Think about what was able to keep this from either rallying and definitely from breaking any more than it did. So, and then you can see how when it did penetrate this line, how that really did have a problem, even here. So this low here is a key low because you can see how it bobbled support here. You guys know how it works when support is support, and then when it fails, it becomes resistance, and then when resistance fails or gets breached, then it becomes support, blah, 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 the fundamental technical theory. So that's why we have these points in. So this will be interesting to see if we just pop above it or if we explode above it. I don't think we're going to explode above it. I think we're going to gyrate around it before we get any extreme move to the upside. But you never know. Now, here's the one thing also that kind of is interesting is that before we had these currencies totally in tandem, the New Zealand dollar, US dollar was starting to sell off. See, remember how we had the head and shoulders kind of in the Australian dollar? Well, we had it here, and it was taken out. Now I would use this low to key off of. You can see how, there's the neckline here. So here was a shoulder, here's the head, here's a shoulder, here's this neckline. You can see how that was taken out, but boom, that came like a balloon underwater right back. So this support area here is obviously the bottom part of the range right now for New Zealand dollar, US dollar support. Now this hasn't made higher move highs yet, so this is interesting. Is there divergence in these currencies? Are we going to see the New Zealand dollar be more of a range trade while the Australian dollar becomes a big bull? These charts are very similar. They both had that same kind of crazy day that was back in March. Right now, I would say this market it's not really a bull because it's been sideways for a month and a half. The Australian dollar has been the creeper rally. I would say that that's probably going to maintain its case, especially with oil rallying the way it is. I would say unless we get a big sell-off in oil, that the Australian dollar, US dollar, even if it has a downside correction, is most likely going to set a base as well. So that kind of supports the New Zealand dollar also. Now, if there's a just really big turn of events that gets bearish for the Australian dollar, then that could maybe leak into the New Zealand dollar. And then there's also the coronavirus thing, but right now that doesn't seem to be something that we need to be concerned with right now as far as the trade. So let's look at the US dollar TRY. Now this is a currency that I get sometimes questions are like, why do you always have this market on? Like, we don't understand why you have the Turkish lira on. I'm like, well, you got to look around all around the globe to see where the strength and weakness is in the dollar, and it helps you to guide all the different currencies. And the Turkish lira actually I call it the Silk Road key to the currencies, especially with the coronavirus, how it hit Iran and stuff like that, and then how it spread there. These are big implications, especially because there's a lot of trading. It's a big trading zone as far as shipping and things like that. So you can see that this trend has been up and up. I mean, this has been in a rally since last summer. And we peaked a week and a half ago. Now, the spread on this, for those of you who have never traded the Turkish lira, I'd be very, very leery of trying to, unless you have deep pockets and you've been trading for quite some time. Now, what we do have here is we do have a potential buy signal setting up. Well, actually, we already do. We have a short-term buy signal. Yesterday, this was the first positive day in a week and a half. And this correction, is it a good place for support? Well, this is the biggest correction this market has seen in, 6 months for sure, the question is it bouncing? Is it not bouncing? Well, I would say look at this as a little key. You can see where resistance was here. Maybe this is becoming support. Okay, let's make this line a little bit finer because it's just, there we go. All right, so here we go. This is a nice little area because this was resistance. Now maybe it becomes support. Remember we mentioned that little plug for high probable Japanese candlestick patterns at the beginning of the webinar? Well, this low that was set 2 days ago was followed by this little small up day yesterday. That's called a harami buy. That's a short-term, not necessarily bullish signal, but it means it's typically a neutral, meaning that the bearish momentum in the short run has a high probable chance of backing off, meaning you're set for a good potential corrective move. Does that mean you're going to be all of a sudden a bull on this? No. It means that you're going to have a very high probable counter trend move. Now, the harami buy, excuse me, is it's in my book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com, and I discuss how it's a good signal to get you ready. A lot of people love them. They trade them all the time. I personally like the trade that the harami sets you up for. The harami is a 2-day pattern, obviously. There's the day that sets the low, and then this pattern is where the second day is in the lower part of the body's range from the down day that set the low. So our key is here. So if you were a bull and you were to exercise this signal that's setting up, now you don't want to be a fortune teller and get ahead of it. So we need this market to close today higher than yesterday. If it settles where it's at right now, it is a true signal. It's called a 3 inside up day. We would prefer, though, that by the end of the day we see maybe this settle up around the 50% mark of this down day. That would give us a very good valid signal that at least in the short run we would expect a corrective move. Now, how high of a correction could you expect? Well, let's just say that we want to know at least where the target is, if it's worth going for, because we may even shoot up to that target beforehand. So what is the potential here? So we have these two levels. We're going to use the fib. Excuse me. All right. So this target range here of 7.0113 and 7.0712. This here is our upside target range. Well, tell you what, even if we were to settle in the 50% of the range, it would be at 6.83. That would yield a very nice corrective move to the upside. And that's just saying that from this signal for a corrective wave, you have a good chance of touching into this target zone. We're not looking to take out the highs and remain the bull trend, but here's the good thing is, when this signal is a counter trend trade, then it's a nice signal to give you, be like, hey, you know what, this has a high probable chance of yielding a correction. What's even better is when it's a trend trade, because what is this? We've mentioned how in the beginning, this overall market is in a bullish trend. This is the biggest correction it's seen in over 6 months. It was the first time we've had a consecutive, 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row where it was down. I mean, we had one day it was basically unchanged. So 9 trading days. It's 2 weeks of trading straight down, especially with the way it ended back on Tuesday. So now here we are on Thursday. We have a confirmed short-term weak buy signal, but this is the trade that alerts us. So, and this, the reason I'm saying this is that if this buy signal is good, that means what happens to the dollar index? If the dollar index in the lesser currencies starts to get strong and get strength there, it's going to keep it from selling. The index itself should not break as much as it would normally if the euro and the pound continue to be a bull against the dollar. And this is good to know because, like I said, we want to know, is the coronavirus trade off the table? And as we get this divergence and free flowing of currencies again, where it's not just the dollar's a bull and every other currency is a bear, or vice versa. Now we're starting to see these different trades evolve with the dollar, because we're looking at the major dollar crosses. We're not looking at like the euro pound or the euro Swiss, which those are other markets that have been trending. And now if this is true with the dollar, you will start to see big swings in those trades, which that's going to get really fun. So we might be in for a really good summer. We've got this holiday trade we're coming into in America on Friday, or on this weekend for Memorial Day weekend, and then summertime kicks off. So I think we're going to see some good stuff. So just to give you guys a reminder here, we have a 3 inside up day forming. It did not happen yet, so don't get all aggressive and all of a sudden say Teddy's like a bull, because if we don't, here's the thing is, we could settle lower today and actually take out this low. What would that do? That would negate, well, first of all, that would mean we wouldn't have a 3 inside up buy signal to begin with, because you need to be up today and settle that way. So that would already mean that that doesn't happen. That's why I said don't be a fortune teller. And even though you had the short-term buy signal yesterday, that's a weak one. I would only use, when you have a harami buy in a situation like this, even though it's setting up for a trend trade signal, I would only, if you're an aggressive day trader and you know what you're doing, and you're trading the hourly, I would use it and trade it that way. Otherwise, I would not use that as being a bullish signal. Wait for the third day for the 3 inside up. It's all in the book. I break it down and how it's such a valuable signal. Not that it always works, but it works a lot. So, and we already showed you one example before. Now let's get into another currency. So you've got the idea with the Turkish lira. We're looking for the buy signal to set up. We have the US dollar Mexican peso. Now this head and shoulders formation finally was taken out a week ago, but it was just dragging. But then the last 2 sessions, shabam. And look at this today. We took out this swing low. So we had taken out this swing low here, which was a higher move low after a lower move high, which had us in neutral. Then we took out this low here, and this was one of our swing lows where we had a higher move high, higher move low, higher move high, higher move low. So this was key yesterday. And then we settled below that as well. Or actually we settled, where did we settle? I think we were right on it. So this low here was a key low. Yeah, look at this. We took this out yesterday, settled below it. Get it a little bit lower. That's more like it. Okay, so we settled below that yesterday, and now we're trading below this here. This is key. This was the anchor higher move low. Remember, this market was in a bear market all the way until February, and then like a balloon underwater. I mean, you just look at the range here. Just showing the first, let's just go to the beginning of 2020. Look at how tiny that is compared to, then in the middle of February, you go from 18.5 pesos, boom, exploding to just shy of 26 pesos a dollar. Dollar strength, major move here, but now, boom, we're starting to fall apart here. We had consolidation. We have a head and shoulders that was confirmed, which has us targeting the basically 21.5 pesos down to 20 pesos on the longer term basis. And especially if the coronavirus trade is off the table. Remember, this market was in a bear market before the coronavirus. So all that aside, this market, there was a reason for this market not to be bullish. So we'll see what happens. Remember, dollar strength, especially what's going on with this coronavirus thing, the best thing for America is for the dollar to retreat. So I would hope that the Federal Reserve and the federal government are being mindful of the fact that the strong dollar was great when this whole thing started, and it's gotten us into where we're at, because that's giving us our buying power without a doubt. But now we need to have our exports be worth something, and that's a big deal. We don't want to price out in the midst of a global not shutdown, but coming out of a shutdown into a global slowdown with the economies around the world slowing down. If we have such a strong dollar, that's great that we can float and fuel these other countries, but no one's going to buy our goods. And that would be a very, very negative side effect from this stuff. So hopefully the dollar does start to decrease a little bit. I'm always a proponent of a strong dollar, but you don't want it to be too strong. And especially in this situation where we have interest rates at such a low point, it would behoove, it would be a good situation for the USA. You really can't control it, so this is something that hopefully does happen. At least that's the way I would like it. And it also helps to put a balance back on the rest of these other currencies. I mean, like I said, remember, the US dollar versus the peso was a bear going into February. There was a reason for that. Those underlying issues and reasons are still there. So those things are probably coming back. So I know this has been kind of a drawn-out webinar today where I've gotten a little wordy on some of these currencies. But that's because we're coming into a holiday market, we're coming into futures expiration, and we're coming into the beginning of the summertime markets, and the globe is coming out of shutdowns everywhere. So we're starting to see whether or not what kind of an impact this is going to have on the markets. U.S. dollar, Canadian dollar, this one is the one that first was one of the beginning sideways trades. This began already back in March. It has been playing with support. And everyone, I think every bear is waiting for that slide because they want to ride a slide that goes on, fills this gap down here. It doesn't mean that that's going to happen yet. I mean, the U.S. dollar, Canadian dollar is not like the U.S. dollar, Mexican peso. So whether this market goes full-blown bearish or becomes a rage, now is it going to be a raging bull? Odds are that's not happening. Is it going to be a big bear this summer? Could happen. Right now we've made a series of lower move lows and lower move highs, but then now we've come into this point where we had made this low, then we made a lower move high, then we made a higher move low with a lower move high, now we've made a lower move low. So we have an indecision. We're neutral to bearish, but it's grinding lower. So it could take us months. Like in June, by the end of July, let's look at it here. Let's see how this market started. Here's 2020, really tight range, boom, gap move higher, and just amazing volatility. Well, let's see, where will we be by July? Well, I would say, could we be filling this gap? Maybe. It may take until July to fill this gap, and then it's just going to basically be kind of a snaky, kind of think about this, slowly trending. Okay, see where I'm at? If it just goes like it's going here, it's still a big move, but this is going to take a month and a half yet to manifest. I wouldn't expect it to go like from here down to here, which would be a move that would take it from here into the gap. Odds are you are not going to see that. Okay, so at least right now, unless you see some major dollar weakness coming creeping into the marketplace. So, all right, so we've covered all those currencies. Let's go back to the British pound, US dollar real quick. Check this one out. So let's see how this is faring. All right, so we started out this webinar, and this one is starting to go positive. Remember, we had the options on in the Australian dollar, US dollar. That's a positive trade. We have the Euro US dollar. That's a positive trade. And we have the British pound US dollar. We have two different strike prices. One is positive, and one is, well, that's a higher one, so we'll see where that's at. And then we have the US dollar, Japanese yen, where we have a good chance at that one popping too. That's only a half a buck away. So this would be, once again, where we get US dollar weakness. The pound would be strong, rallying. The euro would be rallying. Let's take a look at what the US dollar Swiss is doing. Remember how that was a big sell-off yesterday? And then, see, this was on the highs when we started the webinar. Now it's pulling back. So this would be interesting to see. I could see the Swiss still, US dollar might be strong against the Swiss yet, but now let's see what it's doing with the Euro US dollar. Okay, so there we go. Yep, that had pulled. This was negative when we started the webinar. Now it's this is not much higher, but it still is. Look at this. The market's trading at 109.89 right now. So yeah, we just need another 35 pips to take out this high, get above our strike price. And wouldn't that be nice? Like yesterday was kind of like that too, and then all of a sudden, boom, we caught the rally at the end of the day. So the numbers are out. People are adjusting to the unemployment numbers, and I think that especially because they, one, were lower than last week. We have 2 weeks in a row where the expectations were higher than what actually came out. So I know that with the numbers that we're talking about, it's hard to say that that's a positive sign. But that means that the prognosticators, the geniuses that are, especially the sensationalists, they're getting it wrong. And as long as they're getting it wrong, that means the market's going to do what it's going to do. And in this case, it would be sell off the dollar. And a little bit more air has to come out of that sale. So if you want to learn more about what's going on with this, keep watching our videos. And a great way to do that is to sign up and subscribe to our channel, Forex Trading Unlocked at YouTube. And then remember, if you want to learn how to trade these signals, read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And through it, you can utilize the best buy and sell patterns used for over 400 years. Now, we do have a question here. Let's see. DEX anti WB NAS 100 Nasdaq. Well, what about Nasdaq 100? Okay, let's get back to our screen here. All right, let's see. DX anti. Let me just put this in. Checking now. All right, you want to see the Nasdaq 100. Now, if I remember right, we have, in fact, we'll make this easy. Pull up the chart. So we have a question about the Nasdaq 100. We're going to pull up this, and we go to another workstation page. Actually, no, not the workstation page. We want to go to the futures. I think I have on the futures page a link going right to the Nasdaq right away, set up, and it'll have some other information too. So give it a second here. We are pulling up the futures page. So, okay, there we go. We have a lot running going on here right now. Okay, so here's our futures page. There we go, NASDAQ. Okay, so we have a question about the NASDAQ 100. I was in the S&P 500 pit for over 20 years, and I remember when the NASDAQ futures pit first opened up. That was a funny time because that was in my 20s, and a lot of the people that entered that pit were just getting out of college and my age at that time, so I can't believe that was 20 plus years ago already. All right, well, we are loading up this sheet. Of course, we're streaming so much data going into this right now, it's going a little bit slow. Sorry about that, but it is loading. There we go, NASDAQ 100 futures. All right, sorry, it took a little bit to get here. All right. Now we got the chart loading. We have so much stuff streaming here. We're streaming out and streaming in so much data. That's why things are running slow, especially because we have the... All right, here we go. Let's see. NASDAQ. How did we get the... There we go. CME NASDAQ link. All right. That's coming. Just waiting for it to load. Sorry, it's running slow, folks, but we got so much data coming in and out here, and we're streaming out, and now we're trying to pull up some stuff that actually takes a while to load anyhow with all the data it's got coming in. But we're pulling it up. The CME page, the CME group is where the NASDAQ 100 futures are listed. So, and we're just waiting for this chart to pull up. Here we go. Sorry, this page cannot be found. Okay, how is that possible? How is that possible? All right, markets. Let's go to, here we are. All right, so metals, where is it? Eggs, market, home, corn. Let's see if you see interest rates. Come on, CME group, services. Where is? Oh, here we go. NASDAQ 100. I'm going over it constantly. All right. There we go. Welcome to the E-mini NASDAQ 100 futures. All right, here we go. Here is this. All right, so unemployment report, FMC, let's see, key reports. All right, so for our guy who wants to know about the NASDAQ, the reason I'm pulling this up is just checking to see what kind of economic stuff we have. Let's see, internal U.S. monetary policy, interest rate, dry stock. Okay, now here's one thing you want to remember for as far as the Fed. We know that their stance now is they're staying where they're at. Odds are they're not touching rates until January of 2021. So let's see what we have. Record volume for the index back there. Okay, so that's that. All right. Let's see. Let's look at the Nasdaq. Nasdaq 100 iShares. The reason I'm looking at all this other stuff is because our friend here wants to know what's going on with the Nasdaq 100. All right, so iShares, okay, volume there. It's still Friday. Okay, so that's right. Okay, that's a good little interesting thing there. All right, we want the futures. All right, E-mini, here we go. And we want the continuous. Okay. All right, so we are loading up. Here's the Nasdaq futures. All right, so as far as news, okay, technical analysis, we don't need that. We're going to close that part of the chart out. Let's get rid of this volume thing, make it clean. Okay, so now the futures is always delayed. That is by law. So for any of you that are watching this live right now, or if you're watching this after it's recorded, for you, our guy DX Anti, let's see. So yes, we have a nice little rally move that's going on here, and you can see where it's settled on the 18th. It has continued to rally now. I think the key here for I know you're wondering, like, is the bull a rage or is it going to continue? Well, here's our little issue here. One, we have the election going on, and we still don't know how Europe and Asia are coming out of everything. So let's put this up here. Okay, you got the, oops, made this a little darker for you. Okay, all right. So the high from the beginning of the year obviously is critical. Is that our major pivot point? I would say so. I would definitely say that that is the major pivot point. I mean, obviously this market's been in the major bull market, but here's also something I would say to really take into consideration is that, let's just say hypothetically that even if things are strong, I mean, the reality is we have a lot of businesses that may not be reopening, and technology, we know, is driving this rally or at least keeping the market afloat right now, because the tech companies are just booming. They're super busy. And everybody keeps talking about now is the new normal. Well, I don't know what the hell that means, because that's the most ridiculous expression that people are talking about, because what is normal to begin with? The future is always changing. We're always evolving. But the fact that now everyone thinks that our life revolves just around masks and stuff, I think is going to wane over time. Regardless of that, so look at what happened here when we had the sell-off. We came into a major area here. Now let me just put this into perspective for you. This here is 50%. This is our 0.618, so two major fib levels. You can see obviously that we just slammed through this, but we gyrated all around this. Okay, see where this is here. So this on a strength basis tells me that overall this is a good base for support in the long run. This is also, let's say, are we coming out as a V or is it going to be a W? It's a really good chance that we're going to come into a W. Now, here's the thing you got to think of is oil is rallying. It's all the way back about $30 a barrel, and that's one of the reasons why I like the U.S. dollar versus the peso is breaking, and the U.S. dollar versus the Australian dollar versus the dollar is rallying, because as oil gets stronger, that's good for those countries. Now, here's the thing is, oil is good for us for part of our stock market, but if oil gets too strong, then it can cause other disruptions. So here's the thing that's a problem. What happens when you have 30 million people that are unemployed that are, even if they can start to be mobile, don't have the funds to be mobile? And then also the price of gas got down to like, I think 89 cents in certain states like Georgia. And I'm in Illinois. The cheapest we were that I saw was $1.89 or $1.39, and that was only for a few weeks, which that evaporated very quickly once oil stabilized, and now it just got above 25, let alone now 30. So that being said, unless we have a major, quick recovery where people get back to work, then and start getting their own incomes, then I highly doubt that we're going to sustain a rally. So I would say that look for a turn of events back down towards this area, but then be mindful that probably this is going to be a good area here as far as long-term support. Now let's go to the daily chart. Okay, so we had the weekly chart. Now it starts to come into perspective more. Remember, we fell off this high in February. That was the high for the Nasdaq 100. Then we have yesterday where we got up to 94.85 a half. Okay, so what are we doing here? DX ante. Now the trend has been what? Higher move high, higher move low, higher move high, higher move low, higher move high, higher move low. You get the gist of it, right? So I would say that I don't know if you're long this market, looking to get into the market, or what your stance is right now. But key off of this low here at 88.53. And then here's something you need to be mindful of as well, is that this trend, this was really steep here. So it was riding this way. Let me get this right here. Okay. Make this really clear for you. Okay, so that was the initial trend. Very, very, very steep. But that's coming off of a major, major, major correction that happened. I mean, think about this, folks. Here's the all-time high in the Nasdaq 100. It fell more than 50% off of this last major low here, which was in the August. This is from August of 2019 all the way to this high up here, or excuse me, not from August of 2019. Excuse me. This is back. Let's go back to the weekly here, or the monthly. Oops, no, the weekly is where we had it on. Sorry about that. Okay, so if we key off of this low that was in December of 2018, the last major low before we had this major high here, a 50% correction. I mean, look at where the market here, the low here is, what is it? It's 58.20. The high here is 97.63. That's insane. The run-up that we had here was monstrous. Now, we didn't have an overall 50% correction in the market. See, this is where you got to be careful with the pundits and the talking heads, because they always they were exacerbating this slide. They're like, we never had such a big correction. Well, actually, yeah, we have. But this is, and it was not a correction on the overall pricing. It's just from this last move up. So we had over a 50% correction there. And this here was 0.618. So this puts us into that, 70% category. That's a big corrective slide off of any move in just a short amount of time. This is on a weekly basis. This is just in weeks. But look at what's happened too. Markets go out like they go in, or tend to be that way. So is it any surprise that we have bounced back like we have? It shouldn't be. I mean, it really, really shouldn't be. Now, the question is, will we maintain this? Well, now this is where I said you got to be cautious. So on a daily basis, as you can see where we are going, we're just hovering below these highs. I would use caution here. The trend is your friend. If you're already long, that's a good thing, but I would use caution. Anything below this 88.53 sets us up for at least a short-term correction or a neutral bias, So we'll see what happens. I mean, the claims came out today. We are coming into a holiday market, definitely thinning volumes that are going to happen over the next week or so, especially as we head into rollover as well. Remember, the stock market will be closed on Monday in the U.S., and tomorrow is going to be you know, traders are already on vacation. If actually most traders are on vacation anyhow, so they have been for 2 months. So, but we'll see what happens. Great question. I hope I answered that for you, DX Ante. Yeah, leave another question. We'll try to get it into the next webinar. So thank you for your time. And once again, we're going to go back to Forex Trading Unlocked. Please subscribe to our YouTube channel, Forex Trading Unlocked. And